11.
Stand by.
The following program, paid for by Right Path Real Estate, does not necessarily represent the views or opinions of the staff, management, or ownership of this station. It's time to get on the right path with Right Path Real Estate Radio with Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today. Get ready. The guide that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
Mics are hot.
Welcome to the show. Welcome to the show. Jason Bible, Right Path Real Estate. It has been a great week for me. Good week for our organization. Yesterday we got word we got a 30-unit apartment complex under contract at less than $30,000 a door. Did pretty good on that. We're going to do real good on that deal. It is, I think we're buying it at 10, 11 cap on actuals. If you guys are familiar with cap rates, that's pretty darn good. And the units are below rent, $200 to $300 a month. So we are going to do really well. I think we're going to get close to a 20 cap once we rehab it and stabilize it and all that other stuff. Just a really great little deal. Last couple of months, I've had a lot of breakfast meetings, happy hour meetings. You know, since I'm no longer involved in the day-to-day here at Right Path or at Houston House Buyers or any of the other companies, over here at the office, I've had some time to catch up with some of my real estate investor buddies. And yesterday I had a really great meeting. Got another meeting today. Actually, I had two meetings yesterday that went really well. And then I've got another meeting today. I got a couple next week. But these last couple of months since September, where I've stepped away from my day-to-day job, if you will, day-to-day duties in ownership of Right Path in particular, I've had an opportunity to really spend some time networking with some other investors, some guys and gals that I haven't been able to catch up with in, probably 2 years now since I was involved so much in Right Path. And we started comparing some notes. And yesterday after my meetings, and I got another one here today with another buddy of mine, I have this feeling that the market's been changing just because we're so active in the marketplace. We know it's changing. There's all this national media, national news that are talking about what's going on in the real estate market, the stock market, and all that other nonsense. And there are some things that are changing. And we are headed, I'll tell you right now, I'll make this prediction. And if anybody's listened to my predictions before, go back a year ago and listen to the predictions I made right after Hurricane Harvey. All of them came true, by the way. And it's just by looking at the data and knowing a little bit about human nature as it relates to the housing market. But here's what I'll tell you. We are headed, absolutely 100% certain, we are headed for a housing crisis. We are absolutely headed for a housing crisis. I'll give you the TLDR, if you guys are familiar with that. Too long, didn't read. I'll give you the end of the show right here. We are headed for a huge housing crisis. Big time. Real big. Big problem. We got a huge problem. Huge. Big one. And here's the problem. I don't think anybody can solve it. Because there's only one way that the problem gets solved. We're headed for an enormous housing crisis. And I've said this for 3 years now. You can go back and before we even got on this radio show, you can go back and listen to it, back from starting in 2015. And I'll say it again. If you thought real estate was expensive now, just wait. And the articles are just now coming out. I'll give you a classic, this is classic conventional wisdom. This is classic economics. And I fought all these experts on it, and I told them they were wrong. And this is it. As interest rates rise, fewer people will be buying houses. And I said that is 100% not true. Jason, interest rates are rising and the real estate market's going to crash. That is absolutely not true. 100% not true. I'll give you the real, what will really happen, and it's happening now. As interest rates rise, more buyers will enter the marketplace. Everybody told me there's no way, that's not right. I read this economist, I read this dude, I read this hedge fund report, and they're all wrong. All of them are wrong. And I can tell you, I'm the guy in the trenches. I see it every day. And now the data is finally coming out. Let me just give you some anecdotal data here from the Houston area. I know we get a lot of people that watch nationally, so I'm going to get into some national stuff here in a minute. I want to talk just to the Houston people real quick. This is the HAR report for October. After a down month in September, directly influenced by the surge in post-Hurricane Harvey home sales exactly 1 year earlier, the Houston real estate market returned to more normalized conditions in October with gains in both sales volume and pricing. All right, I'm going to read this last part of the sentence because it is very critical for you to understand for the rest of today's show. The Houston real estate market returned to more normalized conditions, meaning what we're experiencing in October is expected to continue, I don't want to say in perpetuity, but for a handful of years, with gains in both sales volume and pricing. According to the latest monthly report from the Houston Association of Realtors, 6,716 single-family homes sold in October compared to 6,417 a year earlier. That translates to a 4.7% increase. 4.7% increase year over year. If you are running a company and your sales are up 4.7% year over year, you're doing backflips. One of the things that a lot of people don't understand is housing, single-family housing, is the largest asset class in the world. There is nothing bigger than single-family real estate. I talk to these commercial guys and they puff their chests out. I'm doing a $10 million apartment. And I'm like, that is chicken feed compared to how big single-family real estate. Single-family real estate as an asset class worldwide is $300 trillion. It's a $300 trillion marketplace. There is nothing bigger. Nothing on earth is bigger than single-family real estate. Nothing. So when you have a swing in one of the largest markets in the world, Houston is one of the largest markets in the world. I'll tell you, for real estate investors, it's the largest market in the country, bar none. I would love to see your stats to tell me it's not, because it isn't. Just by sheer number of, now by transaction volume, it's not, because houses are much more expensive or real estate's much more expensive in other parts of the country. But by transaction volume, by number of units, it is the largest. There is no market bigger in Houston. None. I think there are some in China, but let's be honest, the Chinese real estate market's kind of a government-run thing anyway, so it doesn't really count. Year-to-date home sales are 5.3% ahead of 2017's record volume. We are going to blow through the highest volume year by somewhere between 5 and 7%. That is absolutely insane. 5 to 7% year-over-year growth in the largest asset type is absolutely unreal. I can tell you multifamily is not growing that fast. We are in the middle of a housing crisis. I'm going to explain what that means here in a minute, but I want to go through the rest of this update. Single-family home median price rose 3.6%. The average price rose 3.5%. All housing segments experienced gains except for homes priced at $150,000 and below. That's weird. Why didn't the houses below $150,000 experience any gains?
2 minutes.
I'll give you the answer. Because there are virtually no houses in the city of Houston, Harris County. HAR actually covers Woodlands, Sugarland, that MSA. It's 10,000 square miles. Did y'all know that? It's 10,000 square miles, 100 by 100 miles. This 10,000 square mile area does not have, it has virtually zero houses below $150,000. It's getting really expensive, really fast. And people keep telling me, well, Jason, the affordability index, oh my gosh, what's going to happen to real estate? It's going to get really expensive until it can't. 3 years from now, we're going to be joking about, hey, do you remember you could go into Katy and you could buy houses for less than 150 grand? Hey, remember when you go to Cypress and you can buy houses for less than 150 grand? They're all gone. They're all $200,000 houses now. I was pulling down some data last night. I looked at hundreds, if not thousands of houses. Pulled all the data right out of HAR. Started looking at rehab estimates. I looked at distress market, retail market. I'll give you one little data point. You guys go up into Copperfield. Tell me how many houses are on the market in Copperfield below 200 grand. There's not a lot. There's some tiny little houses up there. We are headed for a housing crisis. And that housing crisis is real estate's about to get really expensive. We get back from the break. I'm going to talk more about what's going on in the marketplace and how you can profit as a real estate investor. It's Jason Bible, Right Path Real Estate. Morning, everybody.
Mics are off.
Oh, Big John is on. Hey, Andrew. Hey, Sasha. I saw a house. If you're listening, Sasha. I saw a house you guys sold, and I so hope you bought it. It's in Bear Creek. Looks like y'all sold it for like 60 grand.
Jet Lending will help you purchase properties quickly with this little
Looked like your
cash
wife
out of
was the
pocket
broker
as possible.
for Grit.
Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas,
Hey, Sheldon.
valued at over $250 million. Jet Lending will help you
Shantae,
evaluate your deals
Rich.
for free and give you feedback
Lola,
on
that's a
value,
cool name.
cost of repairs, and
Morning,
potential
everybody.
loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor
Oh, I see
Networking
Mr.
meeting.
TC is
Lots
on
of
here.
fun, lots of great real estate talk. We'll see you there.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts. Benchmark Insurance Group of Texas, 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to
Mike
expansive
Payne,
soils in the
Mr.
Houston area,
Famous.
it's probably not a question of if you have movement, but when.
Hey,
Call
Sheldon.
Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are you looking
1
for an
minute to come back.
investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets
I like
done.
this new lighting
Train
in
and
here.
maintain quality crews
I need makeup
so
so
it gets
my
done
forehead
right,
isn't so shiny.
and complete the work in a proper order.
I think
so it gets
2019,
done
I'm
fast.
shaving my head,
No more
guys.
managing it yourself, no more doing the work yourself.
Well, I
Fast
got a
Track
lot of
Remodeling
forehead.
really does manage it all.
So give us a call today at
2019's year of the shaved head.
832-742-9992. Again, that's 832-742-9992, or reach us
Coming
on the
back,
web
stand by.
at fasttrackremodeling.com.
This is Business 1110.
Mics are hot.
Welcome back. We absolutely have the best bumper music for a business radio show. This is great. I love it. I had this one guy, when Tom and I used to do these weekend retreats in Right Path, and Tom does them now, we used to have this one guy that would show up and complain about the music during the radio show. And I finally told the guy, I'm like, is it your radio show or mine? It's my radio show. I get to pick the music. I don't care if you don't like it. We're talking about the market today. What's going on in the marketplace? We're headed for a housing crisis, a big one. Huge. Let's go to this really great article here. And then I want to talk about some of the stuff I'm seeing going on in Houston. First-time home buyers face tough road ahead in 2019. This is an article from Zero Hedge. Let me give you guys a little warning about Zero Hedge. They don't moderate their comments, and I think they've shown up on some kind of fake news list. So there's all these trolls that post the craziest stuff in the comments. So just don't read the comment. They used to be really good like 8-9 years ago. They're horrible now, but the article is still pretty decent. So go to Zero Hedge. Don't read the comments. It's a mess. First time home buyers face tough road ahead in 2019. We've devoted a not inconsiderable amount of attention to the slump in sales of new and existing homes that has intensified during the back of 2018 as nearly a decade of near zero interest rates have pumped up real estate prices to levels that have exceeded pre-crisis highs in the trendiest urban housing markets in the U.S., placing homes out of reach for middle and working class Americans. Let me explain what that means. When you look at Case-Shiller Index, for example, that's the metric a lot of economists use, or if you're watching the business stations, they may use the Case-Shiller plus the Home Builder Index to assess the health of single-family real estate. I think both of those are not great metrics. I mean, they're metrics. They are accurate for what they measure, but using them as an analytical tool, as an interpretive tool, is not real helpful. In part because real estate is local. So when you get into Case-Shiller, when you look at the entire index and you don't look at the individual submarkets, you get this impression that real estate is softening. The problem is San Francisco and New York and Seattle and Miami-Dade County are weighing the index down. Home builders are in a free fall for different reasons. But it's a tough metric to watch. So when you read these things nationally, you're like, but I watch the national news and it's telling me real estate's not doing good, but then this crazy guy on the radio is telling me real estate's about to explode. But what's really going on? Although I'll tell you this, for your mental health, just don't watch the news. Just don't watch it at all. I was upstairs working on numbers and stuff, and I could hear my wife had the local news on downstairs, and I could hear it, and it was like, this shooting, that shooting. I'm like, why are we watching this garbage? All we need to know is what the weather is. I care less about this other stuff. Anyways, so don't watch the news. When you read the national news or you watch any of these national shows, they'll tell you, oh my gosh, the whole world's falling apart. We're also going to see, my other prediction is we're going to see a dip in housing somewhere between April and June next year in these high-end markets simply because of the SALT provisions for the tax Trump law. I'm not going to get into all that on the radio show because it's going to put everybody to sleep, but let's just say for the sake of argument, there's going to be a dip in certain markets in high-tax states that they're not able to write those, or there's a limit at which how much you can write off as it relates to property taxes, state and local income taxes. We're going to see that that is all going to come out in the real estate market. You're going to see that in markets like New York. Inventory will continue to increase next year, but unless there is a major shift in the economic trajectory, we don't expect a buyer's market on the horizon within the next 5 years, said Daniel Hale, chief economist for Realtor.com. Unfortunately for buyers, it's only going to get more costly to buy, especially the most demanded entry-level real estate. To be successful, buyers should think through how they'll adapt to higher rates and higher prices. I told you guys for a year, and everybody wanted to fight with me about it. I went on a gazillion different panels. I spoke in front of different bunch of groups. I had all these battles on Facebook. Jason, you don't understand. The real estate market's going to crash because of interest rates. And I said, that is absolutely wrong. You're wrong. Just look at the historic data. There is nothing true about that. This right here, what the chief economist at Realtor.com said, is absolutely true. Inventory will continue to increase next year, but unless there is a major shift in the economic trajectory, we don't expect a buyer's market on the horizon within the next 5 years. Those of you who are sitting on the sidelines waiting for a 2008 style crash, it ain't gonna happen. It's not. That event could be another 10 years away. Everybody who's got their money on the sidelines, these little real estate investors I run into, at the Redneck Country Club event that Jet puts on. Oh my gosh, Jason, I'm just going to wait for 2008 all over again. Well, you're going to be waiting a long time. You're going to be waiting a darn long time. It's not going to happen anytime soon. Inventory will continue to increase next year, but unless there is a major shift in the economic trajectory, we don't expect a buyer's market on the horizon within the next 5 years. God forbid the economy keeps doing as well as it is. Here's what's a crazy thing. You look at Main Street data versus Wall Street. Main Street's doing pretty good. Wall Street's not. I floated this little idea out about a year ago. Isn't it interesting that those things are counter-cyclical? Wall Street's doing good when Main Street's not. How fascinating is that? That didn't always used to be the case. God forbid Congress rips through another tax cut. My wife and I, we actually buy our health insurance on the exchange. And I just got my premium. Our premiums are going to go down at least 10 to 15%. Health insurance premiums. Imagine that nationwide. And a little more tax relief for the middle class. You thought real estate was expensive now. Just wait. So I'm reading through these articles over the last week or so. And I pulled up some data here in Houston. I wanted to look at neighborhoods below $250,000 ARV. So houses actually selling at about $250,000 and below. Then I looked at distressed assets. I pulled out randomly from a couple of zip codes 160,000 houses that were distressed from Hurricane. I'm sorry, not 160,000. 160 houses that were distressed from Hurricane Harvey. You know what I found? I found even before Hurricane Harvey, what they were worth before Hurricane Harvey, they're up 15%. I'll give you a great example. I bought a house right after Hurricane Harvey. ARV was 140, 145. And that's about what it was worth after the storm. There was a little dip there, $5,000-$10,000 for about 6-7 months. As inventory was starting to turn over, as houses were getting fixed. I actually think in the houses below $250,000, I think the dip in prices from Harvey wasn't really directly related to Harvey. And let me explain that. If you drove through these neighborhoods, what did they look like? The grass was all dead. There was trash. There wasn't trash everywhere. The
2 minutes.
The neighborhoods did a really good job of containing the pile, the debris pile to the yard. But the problem is the neighborhood still looked kind of rough for 6 to 8 months. And then once they got all the debris pile gone, once the rehab started, once the grass started growing back, sales started coming. The neighborhoods just looked better. I think it was how rough the neighborhoods looked. I don't think it was the houses. That's below $250,000. Here's what I can tell you. I'm looking at a neighborhood right now. It's a neighborhood I bought some houses in. It's up 15% in like 4 months from pre-Harvey. Meaning, if we didn't have a hurricane, like the hurricane didn't stop these neighborhoods. There was a little blip, 6 to 8 months, where houses are getting rehabbed, flood insurance claims are getting paid, debris piles getting picked up, the clubhouse for the HOA is getting rebuilt, the pool's getting fixed. But once that's done, boom, it was back on. Like nothing had ever happened. This one neighborhood I'm tracking, and it's a giant neighborhood. This isn't some small little neighborhood. I'm seeing prices increase $5,000 to $6,000 in the span of weeks. And it's below that $250,000 price point. The amount of appreciation that we're seeing around that affordable house, that affordable home price is insane. When I get back from the break, I want to talk more about this. It's Jason Bible, Right Path Real Estate.
Mics are off.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Hey, John, if you're listening, we ought to get together next
Are
week.
you looking for an investor-friendly
Big John.
general contractor for your investment property?
I think you got my number.
Then
Send
call
me a
Fast
text
Track
when you're
Remodeling
available.
at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
Do you have cracks
1
in your
minute to
bricks,
come back.
doors
All
that
right.
stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before every repair. Call 346-702-3825. That's 346-702-3825. Or you can reach
Coming
us
back,
online
stand by.
at foundationcheck.com. That's foundationcheck.com.
This is Business 1110.
Mics are hot.
Welcome back. Jason Bible, Right Path Real Estate. Talking about the marketplace, the housing crisis that is a-coming. Jason, you understand interest rates are rising, market's going to crash. No, it's not. No, it's not. Here's what's going to happen. Here's what's already happened. As interest rates rise, people buy at what they can afford as a monthly payment. They go from, let's say they could afford at, 3.5% interest rate. They could afford a $300,000 house, but now we're at, I don't know what we're at for owner occupants. It's got to be around the 5s. High 4s, low 5s. Let's call it 5.5. So that family that could afford a $300,000 house at 3.5% can now only afford a $225,000 house at 5.75%. It puts a ton of pressure on the bottom of the market. A ton of pressure. Here's the problem. We can't build houses that cheap anymore. Cost of construction has gone through the roof. And this little spat we're having with China right now, between the United States and China, is only going to make construction more expensive. I'm not saying that's a good or a bad thing. I'm just saying that's what it is. These houses are going to be more expensive to build. So it's going to put more pressure around the median home price. Again, going back to this article, most inventory gains, this is predictions for 2019. Modest inventory gains continue. High-end inventory growth spreads. Inventory hit the lowest level in record history last winter, but finally bottomed out and reached positive territory in October. High-price markets are a different story. The majority of inventory gains have been in upscale homes in high-growth markets, which suggests higher prices are incentivizing sellers. Let me explain where that really hits home. There is a great article, and it hit Forbes, I want to say, about a month ago, that talked about the collapse in new construction north of Dallas. Plano, Frisco. And I can tell you what happened. They built too many high-end houses. I mean, some of these houses went from $350,000 houses to $600,000 houses in less than 5 years. They just appreciated right out of their own marketplace. So you will see the higher ends of your market are going to soften. That's just natural. Soft home sales continue. After the best sales year in a decade in 2017, home sales are on track for mild year-over-year decline in 2018, which is likely to extend into 2019 with a 2% decline. This is national data. I think what you will continue to see is the influx of folks moving to Texas. That hasn't abated in 30 years. People keep moving here. So if you are a Texas real estate investor, you're going to have massive appreciation. We just have a favorable business environment. Our legislature takes forever to change any laws. It's great. Stuff doesn't happen real fast around here, which is perfect for growth. More companies are coming here every day. I just found out they're spending billions down in Corpus to widen that ship channel so they can bring in super tankers. Then I heard a week later they're doing the same thing for the channel there in Surfside. They cannot bring goods in fast enough. The amount of traffic, just industrial traffic we get in Texas, is unheard of. The state is energy independent, let alone the country is now energy independent. I think it's funny, all that money we spent on green this, green that, and none of it really made any difference. Energy independence was fracking and getting more natural gas. That's all happening. It's a great thing. Millennials purchase the most homes. Isn't that interesting? Millennials purchase the most homes. Millennials will continue to make up the largest segment of buyers next year, accounting for 45% of the mortgages compared to 17% of boomers and 37% of Gen Xers. This was a big lie that I don't know who started it. It was a big lie that millennials won't buy houses and that they want to live like bees in apartment complexes. That's not true. It's never been true. But all these surveys, all this nonsense was put out that said, "Oh, well, millennials are going to live like bees. They're never going to live in a single family house." And it was utter BS. At some point in your life, you must move out of the apartment complex and into a single family house. The problem with millennials is they're so debt-ridden. As the economy improves, they're able to pay off more of their student loan debt and eventually move into single-family homes. It wasn't that they weren't going to make the transition to single-family homes. It was just going to take them a little bit longer. And I'd argue that boomers actually priced out of the market. I think that's the bigger issue. I know a lot of boomers, kids are out, kids are grown, they got grandkids now, and they want to downsize. They got, let's say, a 4,000 or 5,000 square foot house here in Texas, and they start looking around and they go, well, I'm going to downsize, let's say a 2,000 square foot house that costs the same, if not more, than my 4,000 square foot. I don't want to move. That's why you see a lot of boomers staying. It just doesn't make sense for them. Why get a higher mortgage paying for a smaller house? It's crazy. And Gen Xers, I think, are doing a lot of upgrading as they go to bigger houses and their families grow. But this whole idea that millennials weren't going to buy houses was stupid on the face of it. And then when you see all the articles that came out from all of the, I'll use a Trumpism, fake news. That was totally fake news when it came out. Oh yeah, millennials aren't going to buy houses. We need to build these we need to get in a multifamily because that's what millennials are going to do. No, they're not. You can only hang out with your bros, couch surfing for so long before you get a girlfriend or a boyfriend and they go, hey, we need to grow up and get a house like an adult because I'm tired of taking the dog in and out of the apartment. I mean, it's like that happens at some point. It's just the natural maturity of folks. Whole idea that millennials weren't going to buy houses was crazy. Now we've got empirical data that for the last handful of years, it's mostly millennials that have been buying houses. Tax plan remains a wild card for housing. In April 2019, taxpayers will go through the income tax process for the first time since the new tax plan. This is going to be a real shocker for folks. Most people don't keep up with what's going on in world events, let alone what's going on in the intricacies of tax law. And I think this is going to be a huge wake-up call, huge, for the high-tax states. The folks in California, New York, and in New Jersey in particular are about to get punched right in the face in April 2019. Because all those state, local, real estate taxes that they could write off against their adjusted gross income are going to disappear. And they're going to look around and go, I'm really tired of living in dumpy New York. It's really expensive. The commute is awful. And now it's getting even more expensive to live here. They're going to look around California and going to say the same thing. I love California. I fly to LA all the time. Got a lot of friends now in LA. Love San Diego. But wow, is it getting expensive to live out there. Just the taxes alone are becoming crushing. And there's a whole middle class that's getting absolutely obliterated. And they're going to start looking around and go, you know, that Texas thing. I mean, we got half our office, these folks keep roaming in from California. They come in, they got nice tans, but they just look browbeaten from the tax. It's just like, oh my gosh, it's just so expensive to live there. You mean you guys have gas for less than $2 a gallon? And you can drive really big trucks, comfortable. You live in really nice houses. It doesn't cost you an arm and a leg. Yeah. If you thought real estate was expensive before, just wait. These houses are going to get very, very expensive. We can't build a 2,000 square foot house and sell it brand new for $200,000 anymore. We can't do that. It's not scalable. If you want to get really, really rich, you need to start buying single family rental properties. That little house I bought in that neighborhood that we thought was worth $140,000, I'm all in for about $110,000. That house right now, as it today, is worth $160,000. I haven't even owned it a year. It's got $50,000 in equity. How many of those do you need to make $1 million in real estate?
1 minute.
You need 20. And I'll tell you what, that house, based off the numbers I'm seeing here, will double in value in 5 years. It will be a nearly $300,000 house in the next 5 years, just based off what I'm seeing. You buy 20 of those today, 5-7 years from now, you're looking at $100,000, $200,000 in equity. You buy 20 of those, you got $4 million in equity. And we haven't even talked about rental appreciation yet. We get back from the break, I'm going to touch on rental, meaning the lease appreciation, with a little anecdotal story, and then I'll get the show wrapped up. I'll look to see if we got any questions on Facebook. It's Jason Bible, Right Path Real Estate.
Mics are off.
Hey, Daniel, it is great news for realtors. Realtors are going to kill it.
Time is money in a real
Just
estate deal.
slay it, I'm telling you.
Slow or non-responsive, you could lose a deal like that.
You know, Daniel, it's funny. I think it was actually started by
for that is Benchmark Insurance Group.
the REITs and hedge funds that were invested in multifamily.
Mindset.
I really think that's where it was coming
when
from.
You need it. We're here for you.
And the developers.
Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years,
Rich,
Fast Track has
I
completed
think that's
over
what we're seeing in
700
some
projects,
submarkets,
which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done.
If you really want to see something
train
crazy,
and maintain
Rich,
quality crews so
go
it gets
to
done right, and complete the work in a proper
Chimney
order so
Stone
it gets done
in
fast.
77479.
No more managing it yourself. No more doing the work yourself.
And
Fast
start
Track
back in
Remodeling really does manage it all.
2012.
So give us a call today at 832-742-9992.
Look at houses below 1,500 square
Again,
feet
that's
and see how much they appreciate it.
832-742-9992.
They quite
or
literally
reach us on the
doubled in
web at
value.
fasttrackremodeling.com.
Selecting a
I'd look at
foundation company
Middlegate
and
and
their product
Copperfield's
for
another
repair
one.
is a lot like a game of chance. You simply
I know there's a
don't
couple
what you're gonna
neighborhoods
get.
in
The
Kingwood
foundation
that had the
repair
exact
industry
same
as a
thing.
whole doesn't carry a license, nor is it regulated.
20, 30 grand a year in
However, Foundation
appreciation.
Check
It
utilizes
absolutely
professional engineers to review
bananas.
all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
You found or inherited a great
Coming back in
investment
30.
property.
All right.
Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at
Coming back, stand by.
nextgenappraisals.com.
This is Business 1110.
Mics are hot.
Welcome back. Jason Bible, Right Path Real Estate. I got a question from somebody. Hey, Jason, is it time to buy multifamily? I'm doing a handful of multifamily deals right now. I'm buying, how can I put this? I'm buying in the affordable housing marketplace. Meaning I'm not buying stuff that rents for $1,200 a door. I mean, that's not what I'm buying. I'm buying the stuff that's $500-$600 a month per door. You know, we're raising rents to $700-$800. I'm buying in that affordable housing market. So I'm probably not the best person to say, hey, when is a good time to buy multifamily until I can recognize the crash. But here's the other thing I'm telling you. I think these multifamily guys, if this were a normal market, they'd be out of business by now. We should see increase in interest rates. We should see home builders just building like mad right now. Just blowing and going. New neighborhoods, $200,000 price points, just killing it. But the problem is the price of labor and the cost of materials have gone up just geometrically over the last 10 years. And it's put a huge pressure on the first-time home buyer for new properties, like new construction first-time home buyers. So where are those people going to live? They can't afford a house. They got to live in an apartment. My preference is to stay at that lower end of the market. I think that's a good, safe place. That's what we're buying. Maybe is a better way to put it. Here's the other thing I'll tell you. We bought a handful of duplexes on the southwest side of town. When we bought them, rents were $1,100. In a handful of months, we're looking at $1,195, $1,250 a month. I mean, they're up 10% in a handful of months. So get ready, guys. Things are about to get really, really expensive. And if we have a handful of more years, just like we have the last 2 years, wages are going up. Who knows what's going to happen in the stock market? Wages are going to go up. SALT provisions are going to kick in. More people are going to be moving to Texas. Our big housing crisis is housing is about to get really, really expensive. And there is nothing I see that's going to get cheaper out there. Nothing. Even a recession's not going to stop it. In fact, the last housing boom that lasted for almost 15 years had 2 recessions in it. It did not stop the appreciation. Get ready, guys. If you're waiting for the next real estate crash, it's probably somewhere between 5 and 10 years out. It's not anytime soon. And the reality is the next real estate crash.
1 minute.
If you bought today, I don't see how you're going to lose a lot of money even selling into a crash. I mean, you could always lose a ton, but I don't see a crash on the horizon. Everybody's been talking crash, but I think the Black Swan event is going to be massive appreciation. We're already seeing it in the neighborhoods below $200,000, despite Hurricane Harvey. Harvey hasn't stopped it. So it's only going to get more expensive to buy real estate. So if you guys want to get really wealthy, buy rental properties. If you want to learn how to buy those rental properties, I highly recommend you go to one of Right Path Real Estate's workshops.
20 seconds.
We got free workshops every week. Go to rightpathrealestate.com. I want to thank the guys for letting me be on the radio show this week. Tom will be back in studio tomorrow. Build Your Team Thursday.
10 seconds.
Thanks so much, guys. It's Jason Bible, Right Path Real Estate.
Mics are off.
All right, thanks.